Okay, so this next video lecture is still the continuation of our Module 2, Taxation for Individuals. And we are now in the allowable deductions. So, basically, we are allowed two types of deductions. The first deduction is the OSD, or the Optional Standard Deduction. So, this deduction is 40%. In the case of an individual, this is 40% of their gross sales or receipts. In the case of a corporation, this is equal to 40% of their gross income. But please take note, for optional standard deduction, this is not allowed for a non-resident alien individual. Okay, so here in OSD, since the deduction allowed is 40%, so meaning to say 60% of your income is the taxable income. Okay, so this is the first deduction that is allowed. The second deduction allowed, okay, for deducting, okay, from your gross income to arrive at our net taxable income is the itemized deduction. So please take note, you are only allowed to choose between optional standard deduction or the itemized deduction. So for the itemized deduction, we have the following. Okay, so you are allowed to deduct the expenses. Okay, but as we go along, we will discuss what expenses are not included as allowable deductions. But generally, these are expenses which relates to, for example, if you are having a business, so those expenses that are directly related to the conduct of your business are allowed as deductions. Okay, interest. So interest are your interest expense paid for your loan or liability. This is allowed as a deduction. Another is any taxes paid or the excess taxes that you paid in the previous taxable year can also be carried forward as a deduction for your payment this year. Losses, okay, they can also be allowed as deduction. Bad debts, this is the accounts receivable that were not paid by your customers. Okay. Depreciation. Actually, in taxation, what they allow is only cash expenses. So in the case of depreciation, since this is a non-cash items, so most likely this is not allowed, or this is not part of the allowable deductions. But anyway, upon computing later on, since depreciation expense is part of our income statement, so that's why it's listed under the itemized deduction. Okay, depletion of oil and gas, okay, and gas wells and mines. So in this case, these are business entities who are their business is to extract natural resources. So we all know that our natural resources are renewable, but there will come a time that this will become exhausted. So that's why depletion, meaning these are the stocks of these natural resources are already lesser or becoming lesser. Okay, so it's like a loss on the part of the owner, okay, of those companies who extracts natural resources. So this also can be allowed as a deduction. Actually, depletion is the same as depreciation. Depreciation, however, relates to our non-current assets such as equipment, machine, building. Depletion is also an expense which relates to the natural resources on the other hand. Okay, but they mean the same thing. Another is if you contribute for, or if you donate, okay, to charitable institution and other contributions related to research and development. So that can also be allowed as deduction. And of course, pension trusts. Okay, so those are the itemized deductions that are allowed, okay, to be deducted from your gross income. For our employment expenses, this is for the foreigners or aliens, whether they are resident or non-resident, where or in which they only or their only source of income here in the Philippines is salary or compensation income, so they are not allowed any deductions. Okay, so meaning it will be based, or the tax rate will be based on their gross income. Again, this is in the case if these foreigners only receive salary and compensation income here in the Philippines. For personal deductions, okay, please take note, home mortgage. So this is the payment, okay, of your home a collateral for your loan. Okay, that is your payment. Your medical expenses, your contributions, and other personal expenses. Please take note, these are not allowed to be claimed as deductions. Okay, this is not listed in the itemized deductions. However, your social security contributions like Pag-ibig, PhilHealth, SSS, GSIS, okay, so these are the allowed deductions. Okay, so this is up to the prescribed amount of maximum mandatory contributions. So they are excluded from our gross income. Actually, this is deducted from your salary in the case of an individual who is earning purely compensation income. Okay, for business deductions. So in the case of individuals who are engaged in business or the practice of their profession, and they choose to be taxed using the tax table, okay, of our graduated income tax rates. So we have here the list of expenses that are allowed as deductions from their gross income. Okay, first, all ordinary and necessary expenses that they pay or they incurred during the taxable year in connection with their business. Okay, this is what I have mentioned earlier, or related to the practice of their profession, which may include raw material, supplies, and direct labor costs. Okay, so this can be allowed as deductions. Another is wages and other forms of compensation for personal services actually rendered. Okay, even the fringe benefits and travel expense incurred in the pursuit of a trade or a profession. Okay, so meaning these are the expenses related to their conduct of business or of rendering their services as professionals. Another is business rentals. They are renting. Okay, these are allowed also as deductions. Another item is interest paid or incurred within the taxable year related to the conduct of their profession or business. Okay. Another is entertainment, amusement, and recreation expenses, but it should not exceed the following ceilings. Actually, this entertainment, amusement, and recreational expenses, this may be part of their enhancement, for example, for their employees, okay, to regenerate their well-being in their workplace. So that's why they set aside a fund for it. So this will be allowed also as a deduction, but it should not exceed the following. So first, 0.50% of net sales. Okay, if the taxpayer is engaged in sale of goods or properties. Please take note, this is not 50%. This is 0.5 or 0.50%. Half of 1%. Okay? Second is 1% of the net revenue for the taxpayers engaged in sales of the services, including those professionals and lessors of property. So this is the amount of amusement, entertainment, and recreational expenses that are allowed for them as that deduction. Okay, so their taxes, losses, bad debts, depreciation, their contribution to charitable contributions, but this is subject to certain limitations, however, can also be deducted from their gross income. Okay, as well as in the research and development expenditures. So in exchange of this allowable deduction as an individual other than resident alien, so they may choose OSD or optional standard deduction. So again, this is 40% of their gross business or professional income. So again, our allowable deduction is 2. You can choose either of the 2. First is the OSD, or optional standard deduction of 40% of your gross income, or the itemized deduction. Okay, so if you choose itemized deductions, you have to show your proof, like the receipts, okay, official receipts to support your claims. Okay, who are exempted from income tax? So, income from abroad of a non-resident citizen, meaning if you are a non-resident citizen, meaning you are a Filipino citizen but you are not residing here in the Philippines. So, any income that you derive abroad are not subject to Philippine income tax. Only those income that you derive here from the Philippines are subject to tax. Okay? So that's why your income from abroad as a non-resident citizen is exempted. Okay? So we already mentioned this feature, or what do you call it? This description of a non-resident citizen in our previous video lecture under the classification of income taxpayers. Okay? How about for our OFWs, overseas Filipino worker, including overseas seamen? Okay, so in the case of an individual citizen of the Philippines who is working and deriving income from abroad as an OFW, okay, is taxable only on income from sources within the Philippines. Meaning, for OFW, including our overseas seamen, their income derived from abroad is not subject to taxable. Only those income that they derived here in the Philippines are subject to tax. Please take note. So meaning, if they only receive income from their salaries on working abroad, that is exempted from tax. Okay? So, provided that a seaman who is a citizen of the Philippines and who receives compensation for services rendered abroad as a member of the complement of a vessel engaged exclusively in international trade will be treated as overseas Filipino worker. Okay? So, meaning those are seamen who is engaged exclusively, okay, in international trade, or their vessel, is engaged in exclusively in trading internationally, will be treated as OFW as well. So note, a Filipino employed as a Philippine Embassy, consulate, service personnel of the Philippine Embassy, or consulate is not treated as non-resident citizen. Hence, his income is taxable. Okay, please take note. So, in this case, again, overseas Filipino workers, or OFW, is treated also as non-resident citizen in the case of their income. So they can only be taxed, okay, for their income that they derive or earned here in the Philippines. So their income from abroad are not subject to tax. Okay, so those are for the allowable deductions.